Welcome to this week's Closing Bell. Jason Jacoby, Mark Boyer here.
What's up? What's up? What's up?
Fall season, football's back. It's a good
Yeah, I love
time.
football season, right? That's the best time of the year.
Yep, it's a lot of
Although I
fun.
am watching baseball too, because
Yeah, going to playoffs soon.
Dodgers, yeah, we got some playoff baseball, so that's a little exciting.
That'll be
I've
exciting.
gotten into baseball the last couple of years, which is, I can't believe I can even say
I
that,
can't believe it either.
but
But we have
incredible
some
game.
some meaty news for you this week. I mean, we've got some new inflation numbers. You got the auto workers union that triggered last night. You got kind of flat, muted markets. It's been an interesting week. Even producer numbers, producer inflation numbers, which actually increased as well. So the cost that the producers are paying for things has also increased. So we'll kind of dive into that real quick here. But we really want to highlight the first thing that we're going to talk about, which is the CPI report, which stands for Consumer Price Index.
Hmm.
It's gone up, over half of a point since last month.
50 basis points,
50
yeah.
basis point,
Oh,
which is a
since
lot.
last month, yeah.
We kind of expected it. We're in summer. People are traveling more by jet, by car. We've had OPEC pull back demand or supply,
Yeah.
of oil, so which makes prices go up even more. We're sitting at about $90 a barrel as of this morning when we checked it. But so why don't we talk about why do we always talk about core CPI, which strips out oil and food, instead of looking at the real number that affects Americans like
Yeah,
you and
I
I
mean,
and everyone
the
else?
Fed's goal for core is 2%. We're a long ways from there still. So, but what we were talking about is that headline number is the most important because you can't. I mean, how do you throw out gas and food? I mean, like, I need to eat, you need to eat, we all need to eat, and this costs us money.
Yep.
And then, I guess you could have electric vehicle, but the economy, the U.S., we are dependent on fossil fuels. So anytime there's shortages of oil and prices go up, again, supply demand. I
Yeah.
mean, you're looking at higher inflation going forward. Drill, drill, drill. That's what I say. I mean, like, but same time, we're becoming dependent on other countries for oil. We're drilling less, right? So it's
Hmm.
kind of that doesn't make sense to me. But bottom line is, it's hard to look at the inflation numbers, and the reality is that we're impacted by the headline number, right? So that's the
Absolutely.
key. That's really key.
And I think that's just one thing that we really wanted to focus on because you, the consumer, we talk about inflation numbers coming down, which again, oil prices had come down from its highs, about a year ago now. June 2022, I
Yeah.
think, was close to the
Nice.
highs.
Yeah. Yeah.
And so we've had a nice decrease in that. But then again, once OPEC cut production, we cut drilling rigs, and they actually shut down a lot of those this year as well to spike the price. So basically, we're going to, like you said, other countries, Venezuela, um, Iran, Saudi Arabia, for our
Russia.
oil, for
Yeah.
our energy.
Yeah. Makes no
So
sense.
with that being said, we got to remember what the repercussions of this are. So let's talk about, okay, so we get spiked inflation based off of higher oil prices, which affects every other industry in the country, even semiconductor production. You got
Everything.
farming,
Everything.
everything,
Yeah.
heating, cooling, all of that.
Everything
So
is affected.
so what is the Fed going to say now when they see inflation's being sticky or even increasing a little bit?
Well, yeah, that's the question. Is it stickier? And especially with this issue with oil, it's going to stay sticky. Again, we're waiting to see how the banking crisis, and the crisis, especially regional banks, and how that's played out, and that's still ongoing. We got commercial real estate, certain things that are happening there. All these could lead to lower GDP going forward, which would do the work that the Fed's trying to do. So we still look like for one more. We're looking for one more rate increase, possibly November, December. We'll see.
Yeah,
Hopefully, that's all we get. Again, I think this is going to work through. The next few months are going to be really critical to watch and see what happens there
that's
in
good
regards to
points.
all of that.
Great points. So that's what we really want to focus on this week. Anything else that you want to touch on before we
No,
go?
I mean, I think it's important to stay, again, lots of uncertainty still. Markets have, been pretty stable this week. I mean, we're kind of up and down. We're in a trading range at the moment. But again, it's all about looking at your portfolio and trying to, I was talking to clients this week in regards to, what kind of cash needs do I have in the next 5 years, And if whatever those are, as you're looking at IRAs, you're trying to do your planning. If you're younger, you can be aggressive, and weather through these. But if you're older and you have need for income, again, the bond markets have been really solid in here, especially short term. Yeah. I've been taking advantage of short term rates in here. It's really good for a great place to park and wait with cash. So it really doesn't matter what happens overall. There's ways for you to balance and manage your portfolio that helps you attain your goals and what you're trying to do. So always important. Call us. If you need a checkup or whatever you want to talk about that, we're always here to help you think through that.
And again, we hope we're wrong with this increasing inflation thing. We would love to see things normalize, come down. It's not like we're trying to pin our viewpoints on this. Yeah, it's more just like, hey, this is supply demand. This is inflationary. There's inflationary reasons.
Yeah, we've had gas prices at this, fossil fuel prices at these levels before. A couple of years ago, back in 2014, we can make it even in that. But there's always the adjustment. Everybody has to adjust, and that's, bottom line is the consumer, how they're going to have to, affect that. That's what's been driving the markets. Consumer's been very strong. That's starting to wane a little bit. Kind of feel that coming. We've worked through the pandemic excesses, and so we'll see what happens after summer here. Thinking the consumer is going to slow that down, which is what the Fed again wants to see. So let's play it out.
Awesome.
It's going to be interesting.
It'll be interesting. We'll see you next week. We'll keep you updated. Thanks so much.